Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again at the gold market. So on the daily chart we do not see any changes. Volatility stands right now really low. This market's preparing for a Fed decision, but as we explained in details yesterday and also in the weekend, so why we're following the 25 base points scenario. So there are some fundamental reasons exist, psychological reasons exist, and on the Powell place. There's absolutely no necessity to take any sharp steps right now because overall situation stands under control. It's not going out of the control. It stands in general normal. So making some shakes before the president's election day, especially when the Fed will take the rest in October, it seems not reasonable. So sending such strong signal when you can't actually impact on it in the nearest month, so it's not really good. All this stuff together tells us that it's just our choice, that we're watching for a deeper retracement with some possible position taken from the lower levels. And the first level that we agreed to take a look at is 25.40. This is confluence area, and this is, let's call it as a minimum possible destination point if rate will be changed only for the 25 base points. Supposedly, theoretically, even deeper retracement might be, but all the better. So we just will get better entry opportunities. Situation in the Middle East is going out of the control. So we have shared with you on the Telegram channel recent news from the Israel-Lebanon conflict. So it's really absolutely disastrous. So escalation just stands around the corner, and in the nearest few sessions, few days, it's also could make impact on the gold. Meantime, our bread and butter trade has started, so we can see market with this downside action touched 25.60, 30% of the thrusting action. So this one of the trades that we discussed. Pullback here already has happened, but here we could well, consider a few options. So at the first glance, you can see that market has formed a reversal session here, but at the same time, since it's the bread and butter, usually it completes a higher standing 618 resistance level on a whole downward action. It stands slightly higher. That's why I'm not totally exclude the chance that we could get a kind of the ABCD action. Maybe it will not be completed right at the OP target, but some kind of the ABCD informing Gardi's triple to sell is quite possible. Another reason, now we have few technical reasons also suggest on a deeper retracement. So here you could see on the hourly chart, I already put the name here. It's company handle. It's absolutely obvious pattern is forming round top, and kind of the handle is forming. So it will be either in the way the ABCD or market will just after some fluctuations around it could start dropping. But anyway, this is the bearish background. Additionally, on the cross market analysis, I already talked about this in the euro currency report. Take a look on the dollar. We have bullish grabber on the daily chart. It suggests taking out of the stop. So theoretically, strength of the dollar might be relatively solid. Here's some appreciation on 10-year bonds. We see that the yield dropping, slowing down, and actually stopped. So all the things together makes me think about 25 base point rate change and waiting for a pullback. So this may be a bit conservative. This is a bit less risky tactics that it might be if you intend to just jump in and take the part in the doom and gloom moment when the decision will be made, maybe. But this is just our option, our choice that we intend to follow, because we have the reasons to suggest this. But it doesn't mean that it's only proper way to deal with the current situation. As we explained previously, if you feel confidence, you theoretically could try to trade during the data report, data release. Many traders do this to make the easy and fast money. So also theoretically it is possible to use some stop orders for positioning. If you suggest this will be 50% rate breakout, we already talked about this. You could try and place stop buy order somewhere around the top. But as you understand, when the volatility will be absolutely outstanding, you could get some occasional spikes and be involved in a trade that we actually do not plan to open. So I am already passed through this many times. That's why once I have made the decision to not trade the big events, and I'm just following it. So this is our conservative view. Let's keep watching and see what will happen, because we're coming in the final stage, and very soon we will get the answer.